Symbol focus is the capability of staying focused on a small set of assets traded simultaneously. As a result, protecting mental clarity when the market becomes noisy and time feels compressed. It's a structured way of keeping concentration intact through pauses between decisions, so judgment stays steady instead of sliding into fatigue. In fast conditions, extended attention can fray, and reactions can become less rational. Symbol focus preserves a clear mindset by having a clear focus, creating brief resets, and by filtering the impulse to respond to every new movement, especially after losses or wins when decision-making can get distorted. In real trades, symbol focus shows up as a deliberate narrowing of what's being traded. Instead of juggling many instruments at once, attention stays anchored to a limited set of symbols, which reduces context switching and makes trade management cleaner. With fewer competing charts and fewer simultaneous positions to supervise, selection becomes more deliberate and monitoring becomes steadier. Over time, this concentrated exposure also builds deeper familiarity with how specific instruments behave, making patterns, trends, and the feel of price action easier to recognize without chasing random opportunities just because something is moving. Many of the best traders in the world only trade one or two symbols and have mastered their strategy for those. The edge in symbol focus comes from repeatability. It isn't tied to any single win, but to how often decision quality remains coherent when the market offers too much at once. By limiting distraction, execution becomes less dependent on momentary stimulus and more dependent on recognizable conditions. The market can stay volatile, but the process stays more consistent because attention is allocated with intention. Hawk Trade makes this strength visible by analyzing the relationship between symbol load and outcomes. It observes whether performance improves as the number of different symbols open at once decreases, and whether profitability tends to appear under conditions of fewer simultaneously open positions. It also compares results by classifying trades based on how many other symbols were open at entry, clarifying whether focus is simply a preference or a measurable execution advantage that shows up consistently in the data.